start the proper session.
Wow.
Okay. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today, the main news of the day, apart from being the first session of the year, so we'll go through what to expect from the year in general. But the big news of the day is that a Bitcoin spot ETF has been approved, and it has started trading yesterday on the on the New York stock exchanges and the CME. So we'll go through a brief over, as usual, of a brief overview.
Hi. Sorry,
Finished.
I finished. It's just a quick.
A brief overlook of the economic outlook, and then we'll concentrate on the spot ETF, and we'll see what it means, and kind of what happened yesterday. It was kind of like a historic day, really, and what is there to expect for the coming months. Okay, because these things are not always as it seems. So there is a lot to consider. So let me share my screen. Can you see my screen right now? Okay. As usual, let's start with the economic calendar. This week, because it's been a kind of like a light week in terms of announcements, as you see, very few red announcements, but the main thing was the inflation figures. I know for a lot of you there in Australia, we had that announcement on Wednesday. The figures for Australia actually were quite good in terms of inflation. Is starting to come down. Probably Australia is one of the places with the more sticky inflation of the industrialized world, and we're now back to about 4.3%. Where on the other side, in the US yesterday, we had the CPI announcement. There was kind of like a surprise on the upside. So the inflation was slightly higher than expected, and it bounced from on an annualized basis from 3.1% to 3.4%. Okay, so inflation has a direct influence on everything, because it then the inflation drives what the monetary committee is going to do in terms of setting interest rates, and the two main things that they consider are the inflation and the job market. Okay, so we had both announcements yesterday about the inflation, which was slightly higher than expected, and the job market, which on the surface looks a little bit better than expected again, with less unemployment claims that were expected. So what does that mean is that obviously, if the monetary committee sees that the economy is still growing and the inflation is still not at the target rate, it's kind of makes it less important, less urgent to lower interest rates. Okay, so there has been kind of like a resurgence in the market of the yield that is expected for kind of the 5 years, the 10 years, the 20-year bonds in the US, which are kind of notched up from around 4% that we were last few weeks to about 4.2, 4.3%. Okay, let's move away from here. Let me share something else with you. So very quickly, and I say I'm not going to spend as much time as usual as I do on the economy. I want to concentrate on crypto today. This is kind of like the what is expected for the inflation figures going forward. And going forward to the end of next year, it is expected that the core CPI, which at the moment is still at around 4% in the US, it's going to undershoot the Fed target of 2%, and is expected to be between 1 and 1.5% at the end of next year. Okay, And this is kind of like interesting because one thing is what the what the institutions are doing, what the Federal Committee is doing, but the other thing is what the market thinks of what they're doing. And if we see here, so this is the at big institutional level, this is the chart everybody's talking about. Okay, so this is what the market implied cuts in interest rates for next year. And from the distance between where we are and what the market is already pricing in, it's a huge difference. So more than 2%, and even bigger than in January 2008. So the market is expecting 200 basis points, so 2.02% of cuts in interest rates by the end of next year. Even which is a lot, even compared to 2008, where we were looking at a really big recession. So even at that time, the market wasn't expecting such a fast cut in interest rates as it is today. Okay, so this is kind of like important and relevant to consider what to do in the future and to see where we are right now. Okay, now we have a softening job figures in the market. So there are kind of less jobs being created by the economy every month. So we now just barely at around around 100,000, and with a kind of entering a deflationary period where the inflation is going to that we really struggled to control for the past couple of years, now is going to undershoot the the targets that the FOMC has set themselves, which is again remind you about 2% of inflation figures and an equilibrium rate or around 2.5% nominal rate in interest rates. Now, so this is kind of the graph that we use generally to decide, where should we aim for our investments in the in the next few months, and that depends on how the economy is doing. So as you can see, we got four quadrants that depend on if there is a monetary easing or tightening, and if there is accelerating growth or decelerating growth. Now, for the next year, as you can see, the market is expecting quite a strong easing of interest rates as the inflation is pretty much under control and expected to undershoot, and the job market is not running away, so it doesn't need to be controlled in a way. Okay, so we are strongly, let's say, into this top left quadrant. Okay, which normally under normal conditions, where we the stronger investments would be treasuries, so bonds and US growth stocks, like the Nasdaq, for example, and the commodities like gold. But there is something to consider. So I wouldn't kind of rush into growth stocks right now, because we have to consider the relative price. Okay, and if we look at the next screenshot, so these are kind of the equity valuations for different regions and for different asset classes. So this is the PE ratio, price to earning ratios, and you can see for different asset classes, the higher this number is, the more expensive that asset class is in general. And on the right-hand side, in this column, you can see red, green, and different shades. The redder it is, the more expensive it is, and the greener it is, the cheaper it is. Okay, so if we look at the Nasdaq, which we would normally kind of like want to overweight in those market conditions, it is one of the most expensive assets that we can buy. Okay, as is a 25 PE ratio, which is quite a lot higher than the S&P, which is already high anyway. But a lot higher compared to similar stocks in the in Europe, kind of like double the price of this equivalent European stocks, and compared to other things that we could invest our money on. So in an environment, again, when the interest rates are going down, I'm not saying that you shouldn't have any exposure to stocks and shares, because as the interest rates are going down, probably there's going to be a good reaction from the market as the costs for businesses are going down. But at the same time, remember that especially US stocks are had fixed the borrowing requirement a while ago when the interest rates are very close to zero. Okay, so at the moment, they still haven't felt the raise in interest rates as much, but they are going to start feeling it this year. As a bigger percentage of companies in the US stock market will need to refinance their debt. And so even if the interest rates are coming down, they're still a lot higher than they were 2 or 3 years ago. Okay, so and remember that we are going towards a period where company earnings, company growth is going to be very sluggish, or between 0 and 1%, in the best scenario. So if the price doesn't come down, and we're talking about the Nasdaq index, that means that the earnings are probably are already on a downward spiral. So this ratio will get even higher. Okay, so if the price stays the same and the earnings come down, as you can see, in relative terms, this will become even more expensive. Okay, so this is kind of my outlook. So in a way, I'm still in the same idea as I was towards the end of last year, which is kind of overweight bonds at the moment, and just keep that to kind of say normal weight. So I wouldn't rush into throwing money onto the Nasdaq or the S&P 500 right now. And this is kind of like the other thing that I wanted to show you, kind of the PCE inflation, which is the one that the Monetary Policy Committee is considered more important, is trending already to below 2%, which is a target rate, and it is expected to be below trend by the end of 2024. And at the same time, we can see the graph of job creations, so very sluggish job creation right now, which is just above, like not much above positive. So the job market is not very buoyant anymore, but the inflation number at the same time is coming down. So there will be no reason for the Fed to keep a tight stance for much longer, because that could push then the US into a recession, that will take a few months to get out of. And so that's the other thing, though. Where normally the market expected, rates to be lower than the Fed thought for, let's say, an equilibrium rate. Okay. As you can see, just going from 2014, the market expectation was always for lower rates. Now we have changed tack, and where the Fed expected for neutral rates to be at 2.5%, now the market is expecting these rates to be almost at 3.5. Okay, which is kind of like difficult to understand, that where we struggled at low rate in 2020 and before. Now we are expected to grow and do everything perfectly at higher rates, much higher rates than before. But this is what the market is implying. So we are like 3.25%, between 3.25% and 3.5%. But this is where the Fed is steering the ship. Okay, so about 2.5%. So I remind you that as the interest rates come down, bonds become more valuable. Okay, so there's an inverse relationship between yield and price of the bonds. So investing in bonds when the yield is high, expecting for the yield to go down, it means that the price of the bonds will go up. Okay. So I said I'll keep it quite short. So this is it for the economy outlook today. And let's start and have a look at the spot Bitcoin ETF. First of all, let's have a very quick look at the charts and so this is, I go for maybe a little bit of a higher time frame. Okay, so this is the the price movement on a 4-hour chart. So every candle is a 4-hour period from beginning of 2000, from the end of 2022 when we hit the low in the price of this cycle of Bitcoin of around $15,000, and up to yesterday when we hit the new high for for the year of course, but even compared to prices in 2023. Yeah, just what I wanted to also just show you. So if you see this tick that I got here, this is the distance between the highest point between this long-term trend line, as you can see, and the distance of price from this trend line. So you can see when the market has been more excited, okay, more advanced. And if we move this following the trend line with the bottom of the stick, we can see that we were just about at this point in the beginning of December. And now we have yesterday with these, with the start of trading or the ETF, we went way above it, by by more than 1,000 above this, even the highest point that we had from this, and then the market has retraced. So let's go and have a look of some price action for yesterday on the 1-hour chart. So this is I've marked this yellow box as is another impulse move that is still, as you can see, is wider than we are right now, because I don't think that this is finished at all. So, but it's still, to be noticed, it's a 43 to 49 is a kind of like around a 15% move, so it can be ignored. Okay, so as you can see, this is from Monday. So this is why I've marked this, is when there was kind of like a very the 10th of January has been a date it was being in the diary for a while, as the Fed had to say yay or nay about approving the spot Bitcoin ETFs. But it is, there were noises throughout the weeks that this was almost a given, and this is why prices have started pushing up quite strongly. Okay, now we've seen before the start of trading, before the announcement came, there were people like BlackRock and Fidelity. They were talking about the fees connected to these funds, etc., etc. So and the on Wednesday night, the first one to be approved was the Grayscale ETF, and then all the others. About 11 different ETFs that were approved at the same time and started officially trading on yesterday at 9:30 a.m. in New York, but they had already started trading in the pre-market. So 4 or 5 o'clock in the morning, they'd already gone on the market. You could actually buy and sell these already in pre-market. So what's first of all, this is the open at, let me just go back to a 15-minute chart even smaller. Okay, so 2:30 in London time, which is 9:30 New York time. So we were already at 47,500. And you can see price pushed up to about 49,000, and then it kind of like came back hard to roughly where it is today, which is just short of 46. Okay, this in a way on the day is expected, that it was expected because the people that wanted to actually get some cash out of their Bitcoin investments, and they were waiting for this kind of a spike to take profits. But a lot bigger of a drop was expected than this. It's not even 10%, which is not a lot in Bitcoin standards. Now, what is an ETF, first of all, and how do they work, and what can we expect? If you're watching prices, you'll be surprised. They're saying, okay, these ETFs have started trading. Why are prices going down? Okay, first of all, the ETF basically just a wrapper. So there's an asset management company that collects funds and then buys the underlying assets and stores it as a custodian. Okay, most ETFs have chosen Coinbase as a custodian, but some of them, I think Fidelity instead is doing its own custody. So when they get this money, these funds, then it issues shares to its fund to provide investors to access to the underlying asset. So you don't own, by investing in these ETFs, you don't own Bitcoin, but you own shares in a pool of Bitcoin. Okay, so that's the way it works. And then, so the new shares are created as new funds come into the ETF, and they are kind of like removed, they destroyed, redeemed if shares are sold. Okay, so then through a system of market makers, the shares adjust according to the price of Bitcoin. Okay, so these shares stay in sync with basically Bitcoin prices. Now, why is the Bitcoin spot ETF considered such a big deal if you consider that futures Bitcoin ETFs have been available for 2 years already? I think they started in November 21. Okay, so it's over 2 years now that they've been available on the market. Why a spot Bitcoin ETF is such a big deal? Okay, first, apart from the regulatory approval that has now been confirmed, it's the fact that you can, attract a broad range of investors. First of all, institutional investors, because they can, most institutions in their statutes, they're not allowed to invest in certain assets like Bitcoin. So now, by being regulated and quoted on the stock exchange, it removes that obstacle from many institutional investors, which can now go and buy Bitcoin as an investment asset. Also, remember that there are many jurisdictions in which certain pots of money cannot buy cryptocurrencies directly. I know I can tell you, for example, here in the UK, where from your pension pot, if you are managing it yourself, you can buy cryptocurrencies directly. But being this a regulated product, you can invest in now an ETF, which is quoted on the stock exchange. Okay, so it allows a much larger community access to, in this case, Bitcoin, but other ETFs will be available in the next few months. Investing in Ethereum, there are already 2 filings about Ethereum and XRP ETFs, for example, and they may, and as these then get approval, then new filings will be provided and moving the goalposts forwards and forwards and forwards. And also remember that there are many people that are not even dreaming about having their own wallet and or their own exchange account and buying cryptocurrencies directly, but they wouldn't mind, buying some, having some exposure to Bitcoin through their broker. So if you have a brokerage account now, you can buy stocks and shares in your portfolio. Now you can buy shares of these ETF as well. Okay, so it's a lot more, makes Bitcoin a lot more accessible than it was a couple of days ago, and this is the difference. And also, just don't forget this market maturity. So then it can signify the approval by authorities of this, it signifies that the cryptocurrency market has matured, so then it can support a regulated and standardized investment products. Okay, so again, this could attract more institutional capital and increase market stability. But the most important thing, which is not listed here for some reason, is that the managers of these ETFs, when they receive funds, they then need to go out and buy Bitcoin on the open market. Okay, and there's a big difference between this one and the spot futures ETF, because the futures ETF are settled in cash. Okay, so you buy a futures ETF and saying as a way of getting exposure to Bitcoin. Bitcoin is now at I will say 47,000. You think that in a month's time it can be to 50,000. You can make money on the difference in price. But if you buy a futures ETF, the fund manager is not required to go then and buy Bitcoins in the market. Can just manage the exposures however they see fit. Okay, but the difference is that with the spot Bitcoin ETF, now they will need to go out and buy this from the market. Now there's a big gray area now, which is why being crypto people, we always encourage you, if you want exposures to Bitcoin, go and buy Bitcoin directly and put it in your wallet rather than buying an ETF, because there is a kind of like a gray area. Like, I know that these people are required to buy spot Bitcoins, but when? Are they required to buy straight away as funds hit their account, or the day after, 2 days after, 3 days after? How do they manage this exposure if they don't buy Bitcoin immediately, because the price can move significantly, over a small period of time? But this thing is not to be known. Probably, and this is again, there's a difference between the information that is known by the institutional traders, for example, and the one that's available to the market. Okay, we are used in the blockchain world to be able to see everything immediately, because we're on the blockchain, and any information, any transaction that goes on, we can read it on the blockchain directly as it happens. Now, this is not possible at the moment because none of these ETFs are published their wallet address. So we can't see. We know how much funds have gone into these ETFs, which has been in the first day and consistently $4.5 billion. Okay. Now we knew that the market had pretty much priced in levels of around $2 billion of inflows, but we don't know how much of these $4.5 billion would be inflows and how much it would be outflows. Okay, because obviously the ETFs start from a level of zero ownership of Bitcoin. So most of these funds, we have to consider them inflows. But remember, there's a Grayscale as well. That was one of the ETFs, and Grayscale was a conversion. So Grayscale already owned Bitcoin. Okay, and they converted the Grayscale Trust to a Bitcoin ETF. Okay, so the reason why we haven't seen such a big price, and many people commenting on this, is that a lot of the volume was of selling of the Bitcoin ETF, which had been at a discount for a long time, and now the discount has been wiped out and is down to zero. And so the investors, people that already had these shares of the Grayscale, Grayscale Bitcoin Trust, can now sell their shares for 100% of the value instead of having to sell them at a discount. Okay, so on the very short term, kind of like yesterday, today, we still might see a lot of price push to the downside as well as up. So it doesn't really mean that the Bitcoin, as you see, Bitcoin prices at the moment are hovering towards yesterday's low. Okay, and And as I say, it's almost like counterintuitive, because if you think about, well, all this money that's going into these ETFs, 4.5 billion will be enough to make price shoot up by quite a few thousand. So why hasn't it happened? And this is where the lack of transparency comes in. So we don't know if all these companies, all these 4.5 billion, are being converted into Bitcoin yet, or at what stage will they be? Okay, and this is where the kind of these now big institutional investors can use this big chunk of money that they have to manipulate the market in a way. So obviously they now have to convert all this money, and they don't really want to convert it while price is shooting up. If you can imagine that, because that wouldn't be a very good investment, a good return for their investors, as the average purchase price will go up. So they might try to push the price down. Now, another reason that that this may be happening is Vanguard. Vanguard being one of the main asset managers in the US, and we all know the big Vanguard product of the S&P 500, the Nasdaq, and so on. So if you have a pension, you probably have some of the Vanguard funds in your pension, and they actually have refused to. So they're not going into the Bitcoin ETF market. So they haven't filed for a Bitcoin ETF. Not only that, but they stopped their customers trading Bitcoin ETFs. Okay, so not only that, but also they have been thinking, because Vanguard with some of their product had had some Bitcoins, had some Grayscale Trust shares. What they, it is told that they actually sold hard some of the Bitcoin Trust. Okay, so that in a way, if they are come out and being openly critical, saying that cryptocurrency doesn't hold much value according to them, etc., they actually use their ownership of the Grayscale Bitcoin Trust to only allow people to sell and not to buy these GBTC shares. Okay, so obviously, obviously that would have a big effect, because they are quite a big asset manager in the US, and it will make an impact on the total price of Bitcoin, especially considering that Bitcoin, 57% of Bitcoins hasn't moved in 2 years. Okay, so what we are talking about is only that, less than half of the supply of Bitcoin, which is available for trading. Okay, so and this kind of dormant supply has been setting new all-time highs. So that more and more of the Bitcoin supply is well entrenched for the long term. Okay, and just remember this, because as I said, I was expecting, to be honest with you, I was expecting more of a push to the upside yesterday. Okay, but as I said, the initial yesterday, just like greed, basically, okay, speculation, people thinking, well, we're all going to get rich, let's buy some, let's not FOMO. Okay, so it's fear of missing out, buy Bitcoin now. But what's going to happen from now onwards is, as these funds receive investment, they will need to go and buy Bitcoin. So it will be a more gradual growth than maybe was expected. But this will have to happen, as these funds now are, already received a lot more than expected. So in just the first day, the just not the Grayscale, the BlackRock fund by itself have received more than 1 billion of investment. Okay, so these are big numbers. These are big numbers for the crypto world. And if we go and see what's happened, as you can see in the last 7 days, big increase of 15% in Ethereum, and you can see fairly green wave everywhere for most of the cryptocurrencies. But if we look at, there's a couple of things I want to show you, more general graphs. This is the total market cap. We see the last 30 days, we can see that this has grown from 1.6 trillion to 1.8, so over 10% increase over the last 30 days alone. A bit more if you look at the last 3 months, even more than that. So we've gone from 1 trillion to 1.8. Okay, so 80% growth in the last 3 months in the total value of the crypto tokens. So all the 10,000 plus tokens, so 12,179 to be exactly, tokens that are being tracked, they have grown in value by 80%. So not a bad time to be into crypto. More than that, if we go back and we look at the volume, you can see, let's have a look at over the last 90 days again. Okay, we've gone from a minimum of about 20 billion in daily volume to what we are seeing yesterday, which was 152. Okay. And we already, no, it can't be true, can it? So Thursday, 161. Today, is it possible? Already 144 at 8 o'clock in the morning, but I don't know. These are the numbers that we can see on CoinGecko. Anyway, so these are almost like 8 times the volume, 8 times the volume that we had in October. So that shows you how much interest now there is in cryptocurrency, because this, at the end of the day, whether the price goes up and down, this means this is the relevance as an asset. Okay, this asset class now receives volume of 152 billion a day, 161, whatever it is. Okay, so the volume can go up even if the price goes down, because it just means how much of it is exchanged. It doesn't really, is price agnostic. It doesn't really matter what the price is. Okay, so the increase of the volume is very, very relevant, as it means that more people are taking an interest for whatever reason, and we're not to read any more than that in this, but for whatever reason, people are taking an interest in cryptocurrencies and taking part in trading it actively. Okay, so I will say that now, compared to the same chat that we were having 3 months ago, there's a much more, 8 times more interest, I would say, from the traditional investors than it was 3 months ago. So very, very important. So let me see. So Cathy Wood again comes in again. She's the the CEO of ARK Invest in all like different technology funds. She's saying basically that this is they research that Bitcoin would be worth 1.5 million by 2030. Okay, one single Bitcoin we're talking about, and this, you can read that in the Big Ideas report that you can download from their website. But she is saying that now with this approval, the probability of this bull case, which is this one by the way, so there are 3. They present 3 scenarios. Okay, best case, middle of the range, and so this is the bull in the middle of the range, and then there's a bear case. Okay, even the bear case is over 300,000. So it's not a bad time to be buying some Bitcoins. but they're saying the probability of this case has now increased. And again, it's not just what people are saying, but there are now evidence of a lot, everybody getting in on this. Okay, for example, Robinhood now has listed all 11 Bitcoin spot ETF on the online trading platform. So again, I'm not saying that everybody will rush out and buy these things, but I'm just saying that the ease of access to cryptocurrency has now reached a level that wasn't even thinkable 2 years ago. Okay, so we are now getting, so this, I can't just stress enough how important this step is, because we are now into the mainstream. Okay, now they will need time to see the effects. We will need time to see the effect on this, on price, and before price finds a good level. And we can look at a chart again in a minute, but there is no denying that big companies are now moving onto the sector as one of the offerings on their platforms. Okay, so this is the last one. Robinhood is by no means the most important, but is what a lot of the younger generations are using to manage to do their trading. So it is relevant from that point of view. Another thing, Circle, you might not be aware of it, but Circle is the manager of the USDC. Okay, it's the kind of the company behind USDC, is now gearing up to do an initial public offering. So again, cashing in on the interest for crypto, and it's important as well, because then it will become a public entity, and again, it's another step to say how the crypto industry is maturing. Okay, so again, this is a stable coin, so remember that it's not investment is almost like investing in a bank for an IPO, because they represent a bridge between the kind of banking sector and kind of like the fiat world and the cryptocurrency world. So, but just bear in mind that they capture a lot of funds again, and then they make money by investing these funds in the kind of normal market conditions, or buying bonds and interest rate swaps and so on. So this is a couple more things. Let's say a Grayscale, just after having the ETF approved, they now push forward another filing of a covered call Bitcoin ETF. Okay, what is a covered call Bitcoin ETF? So it's still an exchange traded fund, but in a covered call, it means that they will, in this fund, Grayscale will place some Bitcoins that they will buy with the funds, but then out of these Bitcoins, they will sell some options and capture the premium of these owning these Bitcoins. So what is a covered call? So imagine that you own Bitcoin at 50,000. Okay, if you sell somebody an option to buy your Bitcoin at, let's say, 60,000, that person will pay you a premium to have that option. Okay, so if the price goes above 60,000, then the person that bought your option would exercise the option and would take a Bitcoin for 60,000. Doesn't matter what the price is. The price may be 200,000, but they will buy your Bitcoin for 60,000. On the other way, if price by the end of the option contract doesn't break the 60,000 level, you collect the premium and you are free to then start and sell another option. Okay, so it's a way of getting a revenue out of selling options that you don't think they will be exercised. But even if they are exercised, what do you get? You will basically cash in the the option strike price, which is higher than what you paid for your Bitcoins, and you can start again. So you have more cash into the fund, and you can go out and do this again at a different price level. Okay, so we don't know if this is going to be approved or not, but it will kind of like it will appeal to people that don't think that the increase in price is going to be fast, but I think it's going to be manageable. Or if there is kind of like a bear case, obviously, if you think the prices may come down, this is kind of thing that will still make money even if the price come down up to a certain level. Okay, so you can see all these things now are increasingly being being applied for, and now that the door has been opened to the spot Bitcoin ETF, other crypto-based ETFs may become approved as well. So again, I remind you that the Ethereum and XRP ones are already on the cards. Any others haven't been presented yet, but they might be applied for and maybe approved in the near future. Now, so this is what kind of like baffling me a little bit as well, and probably to be explained by the Grayscale ETF sell-off from Vanguard in particular. But the market had priced in about inflows of about 2 billion in the spot Bitcoin ETF, and now yesterday we had more than 4.5 billions of investments. So so I was expecting a much higher push in price than we have seen, but if it's not happening today, it will. And I personally believe that this will happen in the next days and weeks. And especially remind you that we are going towards the Bitcoin halving in the spring, and if you combine this with this, knowing that a lot of the Bitcoin hasn't moved in the past 2 years, so who are the sellers of Bitcoin today? So who is selling these Bitcoins to these new investors that wanting to buy? And the answer is that mostly it's from the miners. Okay, because miners obviously have got costs that they need to cover, and now kind of Bitcoin has kind of like gone back to decent levels from their point of view, compared to how much it costs them to get to actually produce Bitcoins. They are starting to sell some of these stash that they have put away. Okay, so what happens then in May is that the Bitcoin rewards that they receive for producing a new block will halve. Okay, so there will be, the miners will have a lot less new Bitcoins to sell to the market than there currently is. So the inflation, the Bitcoin inflation, will actually come down. Okay, and so we have this approval, which brings new funds into the market. We'll have the halving, which reduces the supply level. So more demand, less supply. Now, guys, I mean, I don't know about you, but I can only see one way that this is going to go. So there's an article here that's interesting, and I was talking about earlier on about the lack of transparency. So we don't know exactly when these are going to start be invested into Bitcoin. And they actually, this trading, this is Trustnodes, which is obviously a publisher, has actually asked all these providers of confirmation of when they'll be doing the buying, but they haven't received a response yet. In particular, Fidelity, because they are their own custodians, and also they've asked them if they could publish the public addresses where these Bitcoins are going to be held. But again, at the moment, is the policy just like you have to trust me. Okay, so and this is the difference between, you know, the fiat world and the Bitcoin world. And so even if this is a good news ETF from the point of view that it will allow many more people to invest in cryptocurrency, we are still in the old world where, you know, there is somebody else in charge of our funds rather than us being able to, you know, to control them ourselves. Okay. So and that's just another thing that's not connected to the to this, but it's interesting. So this is Algorand and Hedera. They are partnering to develop a decentralized recovery protocol to recover digital assets. And again, these are the kind of the real initiatives that then make the whole blockchain world go a little bit forward, you know, because you could just think about how much money has been stolen from Ethereum alone over the last year, and it's not possible to imagine, you know, a mass move into, let's say, blockchain financial management with more than 10% of your funds just disappearing, you know, and not being able to be recovered. So this is kind of, it's interesting to see these activities, these initiatives coming together, and we need to see what the what the results are. But this is important because, you know, it's important that all blockchains work together to create a compatible standard across all wallet software and all blockchains. And again, I know that at the moment we are still in very, very entrenched communities. Like we have the Bitcoin maxis, we got the Ethereum maxis, we got the XRP maxis. Everybody's fighting their corner, you know. But I think the real winners, you know, as we've seen in any industry, if you go back to the VHS, you know, we had Sony on one side with a fantastic product, and we have everybody else on the other side. And the people that work together actually won, even if they had an inferior product. Okay. And so we all used, you know, VHS for many years instead of Betamax, which was a much better standard. And so the same here. It's not like, you know, the one ring will conquer them all kind of environment, but more like, okay, can we all work together to improve the standard for everybody? And can we get to a kind of like a Wi-Fi kind of standard for blockchain as well, which would improve everybody's access to crypto products, not just the people that belong to one particular community rather than the others. Okay, so what can we expect here? You know, this is at the moment the current move, which is, so am I looking at it? Sorry, let me just go to this. So this is the current move, which is quite small, even compared to other moves. Let me just go. But it's still 14%, okay? But if we see compared to even to what we've seen recently, I mean, this is obviously quite a big move, but I just want to go to something more. Where are we? So definitely at least another 5 to 10% is to be expected out of this move. So I would expect in the next week or so to see prices testing the top of this range. Okay, to the 50 to 52,000 range. I know 50,000 is a big psychological obstacle, but if we look here, you know, there is past 48,000. There isn't much here until we get to 49.5 to 50,000. So definitely expecting in the next couple of days to be playing the top of this range, sort of 50 to 52, and I wouldn't be surprised to, you know, if we actually overshoot that as well, because I say these even the Grayscale trust only has a certain number of bitcoins, and although they have facilitated the sale of these rather than the purchase, they will run out at some stage, and the new influx of capital will need to go out and buy Bitcoins to put in that fund. Okay, so what we can expect in price, total price from here on, we can only try and guess by looking at what happened in the past. Okay, so I ignore the kind of pandemic March low, but if we just consider here from the beginning of October in 2020, where's my from here to the previous high, it's just short of 600%. Okay, so shall we do the same thing here? And even if we start here from the bottom, let's see where 600% takes us. So that would take us, and this is again, it's a conservative estimate at the moment. That would, even the very conservative estimate would take us to around 90,000, which is 50% above the previous high. Okay, but this is kind of from the bottom. I mean, if we were to really measure that from the bottom, it would be a lot more than 600%. If we were to calculate instead of from 10,000, from 3,000, it would be 3 times as much. Okay, but so this is something that I expect to be reached fairly quickly. So I will say within the next 6 months. Okay, and again, I'm putting. I don't like sitting on the fence, so I am putting my lot out there. So this is the next 6 months, because it generally takes a little while after the halving for the kind of a bull cycle to start in earnest. But after that, I was thinking by the end of 2024, we should definitely be in the 6 figures in Bitcoin. Okay, so this is not investment advice. It's just kind of like my, I would say kind of like educated guess and my expectations. And as I said to you in the past, I for myself, I gave the buy, so I was all in at around 28,000. For that point when they were started to have rumors about the Bitcoin spot ETF being approved. So I thought I'm all in. Okay, so what you do with your own funds, if you buy any or not, Bitcoin or the cryptocurrency, that's completely down to you. But I will say, prospect of a 400 to 500% increase in a varied crypto portfolio in 2024 is for me a fairly conservative estimate. Okay, so I wish you good luck with that, and just stop sharing now and see if there are any questions to be answered. Now, that's a big question. How long do you miners usually stash the cash for? And that is really depending from their own analysis and from their need for cash. Now, what happened in 2022 is that a lot of miners had access, were kind of like the public companies, and were able to access quite a lot of investment. So they didn't need to sell a lot of their stash to fund their operations, especially when Bitcoin was 20,000 and below, because that was fairly close to their production cost. So they do sell when they like. It's what they really is what the investors, what the shareholders will force them to do. But I suppose it's like many long-term investors, the shareholders are quite patient, waiting for the big push in price to happen before they sell. That's what I would expect. But I think the ones that needed to sell, I think a good number would have done it yesterday. And then we'll see in the near future. But remember that the supply of Bitcoin is being very, very stiff. I do expect some. So in a way, at the moment, with this approval, we're now in the fight of who believes that this is going to be one of the best sellers products. I'm talking about for the managers, okay, fund managers. Who believes that cryptocurrency is going to help them maintain their presence, and who believes instead that there's something to fight? Because again, if people can make money in cryptocurrency, why would they need to give money to Vanguard and Fidelity or anybody else? They just can do it themselves. And this is the kind of like big worry, I think, for a lot of traditional managers, and why they want to try and control it as much as possible. Della, I looked at just from September of 2020. Okay, so that is when Bitcoin had already trebled in price by its low. Yeah, because the low, the low in March 2020, it's kind of like a bit of a really extraordinary event. Okay, Jonathan, you're talking about altcoins, and it's in investing, you're talking about a beta. Okay, so a beta is how much. So first of all, two products that are correlated, one with a low beta and one with a high beta. It means that when the first one moves, the second one moves, if it's a positive beta, more than the first product. And this is the relationship between Bitcoin and a lot of altcoins. Okay, so it's almost like an amplifying effect. The altcoin amplify the moves of Bitcoin. So Bitcoin moves 5%, an altcoin will move by 20, and so on. Okay, so this is what happened. But the same, just remember the same thing happens on the downside. So Bitcoins move down 5% and the altcoin moves down 20%. So a lot of this is, first of all, what you believe will happen in the market, and secondly, what appetite you have for risk. Because if you are more conservative, you keep to the big projects. If you're a little bit more adventurous, then you're looking at opportunities in smaller projects and maybe layer 2 projects or some chain that you really like. And so that's how I see it. I think that a good approach will have to have a mix of the two. Some big projects, some smaller projects. And I mean, for me, I consider the big projects as foundational assets. Okay, so something that I will keep in my portfolio for a long time without selling. But some of the smaller projects are definitely just like cash cows, something that I buy and sell just to make some money. Chad, when would be ideal to get into TMF? Probably about 3 months ago. that was the answer. When he was under 40. But at the moment, actually, price has come down by about 15%. So it's they're a pretty decent price point right now. So TMF, again, for those of you that don't remember, the leverage version of TLT. Okay, TLT is an ETF that invests in 20-year plus bonds, and the TMF is basically built so that they can, again, multiply by 3 times the effect of TLT. Again, so if you see TLT going up by 1%, TMF will go up by 3. TLT comes down 1%, TMF will come down by 3. That's the way it works. But although on top of the projection of growth as interest rates start to come down, they also pay an interest. I mean, having bought those in before the end of the year, they paid a dividend in December just short of 1%. So, you know, the interest at the moment is between 3 and 4% on the dividends, plus the, you know, potential appreciation price, which I see again as, you know, inevitable. So for me, it's a good, safe way of, you know, taking advantage of the expectation of the cuts in interest rates. Well, not so much as a buy to hold, but just follow the interest, follow the bond markets, and see, obviously, when they reach a good, you know, point where they have again gone back to long-term averages, then yeah, then might be time to sell those. Okay. Oh, by the way, and let me just share something very, very quickly. As of until the end of today, I will comment on, for those of you that are already in Modern Day Investor Facebook group. So I will be commenting in the chat under this post. Okay, there's an open chat here. Okay, I don't know many people actually realize that there was one because I've seen some people actually commented that there's actually a there's a chat I will be monitoring. So if you want to talk about this, I'll say for today. So I won't do it anymore after today, but for today, as I'm in front of the computer, I will be looking at this chat and commenting on that, as well. Okay, so if you have any questions about the Bitcoin ETFs, then that's the place to engage. Okay. Excuse me. So stop sharing. I remind you that you know, I remind you to go and follow Jonathan for his session on Cardano. I mean, most of you should have the link, but Jonathan, that's for the lazy ones. Then place the link again. And if you haven't been on one of those before, then I would encourage you to do it today. And then just put it into your routine. Okay, so at 8 o'clock on a Friday morning, you come to this, then you have half an hour of pause. You can go and make yourself a cup of tea and do whatever you need to do, and then at 9:30, you go and follow Jonathan as well. Okay, so you got the old Friday morning organized. Okay, so I again keep an eye on price movement for the next few days on Bitcoin. It should be quite volatile. And very quickly, they vary. So the fees, they vary between the different ETFs. They go from 1.5% to, I think, in the grayscale to, I think it's 0.3, 0.2, 0.3 in the lowest ones. So you just go and look at the different ETFs and look at their fee structure. That's the range pretty much. Okay. All right. So goodbye, everyone. Have a fantastic weekend, and I'll catch up with you next week. Bye, everyone.
Goodbye.
Thank you. Bye.
Thank you.
Cheers, guys. That was interesting.
Chad, you can have a chat straight away. If you stay, let me just stop the stream. And so I think everybody else could actually leave.